All right. Are you serious? Guys? This just in. Silver is exploding on price of silver exploding as we were told it would if we would have just focused and listened to Colin Bloom. Okay. Also, the stock market doing great again today. Looks like it's up about 60 points, but again, holding up over 44,000. Price of gold is strong. Everything seems to be moving in the right economic direction. But the guy who can help us understand where we go from here, is it time to buy? Should we jump in the silver craze now? Nobody better than over at www.noblegoldinvestment.com, www.pastorpaulgold.com. You can click on the link below this video or pick up the phone and call him at 877-646-5347. Here he is, the man, the myth, the legend, Colin Bloom. Colin, how you doing?
Pastor Paul, so good to be here. It's so much happening, so much to unpack today. But yeah, I mean, we can dive right into silver and kind of talk about that. And it's been a big year for silver.
Let's start with the fact that you wrote the book, the new,
Silver's the New Oil.
Silver, the New Oil. And you made some predictions and it looks like they're coming true. Tell us about that.
Yeah. So the book released in December of last year. And when you go to Amazon, there's books on commodities. I'm the only book on silver that just dives strictly into silver. I also, in the last 2 chapters too, just to give somebody, if they're interested to get it, I have a chapter on real estate opportunities where I dive into satellite cities, and it's a strategy that I actually use myself, where it's part of my portfolios. I look for satellite city real estate opportunities. That's one of the chapters and I get into a few specific properties that I've actually purchased. So I talk about that. I think that's interesting.
Yep.
And I also have a full chapter on platinum, which platinum is up 50% since the book came out. So even though the book is really focused on silver, I do talk about those 2 things also. And we can get into those things later if you have questions about those, and I'll tell you why I think those things are interesting investments. But when the book came out, silver was sitting around $28.75 per ounce. Today, we're looking at silver above $39 an ounce. So, silver has outperformed pretty much everything out there, except, in terms of the commodities, except for platinum. Platinum has outperformed silver, but it's done very well. Even though the stock market's done very well, silver has done very well. And I think it was the easiest bet that I've made in terms of price, because, if you just took this one stat, which is the gold to silver ratio, if you go back the last 150 years, the gold to silver ratio is typically 60 ounces of silver to 1 ounce of gold. That's been the 150-year average. It's been lower at some point, but when it gets above 100, which it was above 100. So it cost 100 ounces of silver to 1 ounce of gold. It never stays there. It never sticks there. It stays there for a few weeks, a month or 2, and it had stayed there for much longer. So I knew that the silver price was going to go up because that ratio is just, unless silver is not in use and not in demand, like, why wouldn't that 150-year chart make sense, right? It's just going back in history.
Right.
Does that make sense, Pastor Paul? Like, that's pretty easy to understand, right? It's just
when you figure out over a period of time when the ceiling is and the floor is on certain things,
correct.
It's going to keep bouncing, usually within that range.
Right. Yeah. So it was an easy bet to get below that 100. And I think we're sitting at like 89 now. And gold's starting to hold again and starting to move up a little bit. But there's some repercussions to what silver's doing. The one repercussion that I love is anything that affects the banks in a negative ways. I feel great about it. I hate the big guys taking advantage of us.
So you're right.
Yeah, so there's 52,324 futures contracts short betting on the short of silver right now. And so every time silver goes up another dollar, they lose millions and millions, hundreds of millions of dollars.
Wow.
So these banks, a lot of these banks bet the wrong way. First of all, these are not central banks. These are institutional banks,
Right.
funds. They all bet silver going the other way. So they bet silver short. So they're losing a tremendous amount of money. And if you look at that, if you think about what the repercussion of that is that there's so much more paper of silver than actual silver.
Okay.
And that's a benefit to you and I who own real silver, because eventually that paper market goes away. It doesn't need to be here. You can own the real thing. It's easy to own the real thing. And so so they estimate right now that there's 375 ounces of paper for every 1 ounce of actual real silver.
Wow.
So this is, in my opinion, a bubble waiting to burst, right? Eventually, the banks are going to bet wrong. The hedge funds are going to bet wrong. People are going to go, I want my silver. And this happened to gold earlier this year. You
Yep.
remember,
I remember.
people started calling in their contracts and it pushed the price of gold up, right? Because people were like, where's all the gold?
Yep.
The same thing is going to happen with silver, in my opinion, is that I think we're just at the beginning of this bull run. And I think people are going to get fed up with this type of situation. And if you look at what Basel did for institutional banks, Basel's told institutional banks in July of this year that they need to hold real physical gold, not paper gold. They said, you got to hold real gold. And I think what's going to end up happening with silver is that they're going to send the same message that these derivatives of silver are not good for you as a company. They're not good for investors. Like, you got to hold the real thing, because if you think about it, 375 ounces of paper to 1 ounce of real, eventually that blows up. That goes away. We've seen it in every market. We saw it in the real estate market when they did the derivatives of the loans, where they kept selling the bonds and kept selling the loan. We've seen it in so many markets. So I think to answer your question before we got on, I still think there's a lot of room in silver, because you still have this real paper inflated market that actually is an amazing opportunity for investors that are buying the real thing, and they're leveraging, right? This is all a leverage game.
Yeah.
Smart investors, billionaires, wealthy people, they're not leveraging. They're buying the real asset. And that's the nice thing about what we do, is you can just buy the real asset. You don't have to buy the SLV or the fund. You can get the real thing. And I think buying the real thing will prove to be highly profitable in the future, because you're buying it with no debt. You're not buying a 375 to 1 ratio. You're buying a 1 to 1 ratio.
Yeah, that's because that's if you get the actual physical
Correct.
metal.
Correct.
Do you see gold continuing to go up? It's over $3,400 an ounce.
Yeah. Yeah. I mean, I think it's a function of a few things. I think with gold, you have to look at the debt in this country and what we're doing. So our debt to GDP ratio is close to about 130%, right? So we make less, significantly less than what we create in GDP, gross domestic product. So I think that, as these things continue to happen, you see investors going, wait a minute, our debt is so high right now. It's an incredible bubble. And to get into some specific, and we always talk about the debt, Pastor Paul, but let me just get into a few things that are interesting about the debt.
All righty.
So if you look at our U.S. debt, if you look at in U.S. debt in 2008, 40% of that debt was held by foreign creditors, which means foreign central banks.
Mostly, and including China, right?
China, Japan, all these countries buying our bonds.
Right.
But that's changed dramatically, because countries are moving away from our debt. They don't feel comfortable. They've raised the red flag for our debt. So as a country, we still need to sell our treasury bonds. So what we've done is we've gone to the private market. Now, the problem is the private market is not as easy to appease, right? The private market goes, well, I want a better return. Whereas central banks typically are looking for more steady, they would just buy it as an asset. The private market has been the place to sell our treasury bonds, and it's increased by 56% since 2008. So we have these new buyers that are private investors. The private investors are buying, and that's why over the last 2 months, you've seen us release bonds and no one's buying them. And then you saw what happened is that the Fed had to jump in
Yep.
to buy our bonds.
Yep.
And that's why we're seeing the 10-year treasury continue to go up. That's, people are saying, why is the 10-year going up? It's because the central banks that used to buy our treasuries and in a huge amount are pulling out of that market, and they're less worried about price. The private market, you and I are going, wait a minute, I can make
Yep.
7%, I can make 4.5% of the bank, or I can make 30% in gold. Like, why am I going to buy a 10-year treasury and make 4.25%? Right? Like, why would I want to lock up my money?
So
So
we went from about a 90% of our GDP foreign creditors had about 90% of it, our debt. We went from that to where we now it's maybe 40%, and we own
correct.
60%. That's a big, and most of that you're saying is the private market,
The
not
private market, yeah, and the private market is wants better returns, right? They know inflation's high. They know they have more opportunities out there,
yes,
and so this is something that is concerning as a country, because as much as President Trump and Powell are in conflict, right, over
right,
rates, us just lowering rates will not necessarily lower the debt cost to homeowners and to creditors. Um, the 10-year is what needs to go down, and the 10-year is actually going up. And what that's saying to the public, this is the scary thing, is that when the 10-year continues to go up, that is saying to the public that the bond buyers think that the 10-year should be in the 5s or 6% range. They think
right,
it should be much higher, because they're saying, like, if I'm going to lock my money up for 10 years, I want to get a much higher return,
right,
because I can get better returns in other places and safer returns in
yeah.
other places. So this is the thing that people don't realize. I know Trump and Powell, it's this whole idea, but really them just lowering rates, if Powell resigns or is kicked out, won't do it alone. They're going to have to do some type of money printing.
Yep.
And what I think is going to happen is that we're going to go through quantitative easing like we did in 2009
Yep.
to stimulate, right? In 2009, we needed to stimulate the market because the credit markets were destroyed. People can get loans. We needed to get money back into the hands of the banks, right? We needed to get them loaning again to get the
So
economy going.
we printed like crazy, and it was during
Like,
Obama's term. I remember, because he inherited it. I have to give
right.
it, and he just said, "Look, only way we're going to get more money available is print, 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 baby, print."
Print,
So,
baby, print.
so let me ask you. So Trump wants to drop that interest rate so that the home market,
Right.
people are stuck. They can't sell their house because the buyer would have to pay too high an interest rate. And if you can't sell your house, you can't go buy a house. And
Correct.
it's put us in that little bit of, we're in a jam.
We're in a jam.
Trump wants to, let's drop that down quickly. Let's stimulate that whole market. But you're saying that doesn't solve the bigger picture. Is that
It
what
won't solve the bigger picture, and it won't necessarily drop rates down, as we've seen. Now, they're meeting next week. There's some talk maybe they're going to lower rates next week. There's a meeting in a month. I think they're going to lower rates at some point here. I think it doesn't make sense for them not to, because if you look at, if they're just basing it on inflation, and you take out the tariffs, which I think you should. I think you should
Right.
just base it on true inflation. Inflation is actually down. It's actually right around 2%. And in that world, then they should be able to lower rates. So I think people are going to be shocked that they're going to have to come up with some different measures besides just lowering the rates, the Fed lowering the rates. They're going to have to find some different ways to get liquidity out there because the banks are really nervous right now. They're not comfortable, and that's why you've seen the amount of single family homes on the market is the highest number that we've ever had in the history of the United States. And
Wow.
if you think about that just in general, that concept, I mean, we've been sold the idea that home ownership is part of the American dream, right? The white picket
Absolutely.
fence, the 2.2 kids,
Private ownership. Absolutely.
private ownership. Yet there's more single family homes on the market today than ever in history. So, when you look at just the investment market in general, it's a very confusing time because you have the stock market pretty close to an all-time high. You
Yep.
have a lot of other things roaring, and yet and you would think that people would feel like they have money. Why would they sell their home? Because I think people aren't doing as well. I don't think the economy is as well as they want. Why would anybody want to sell their single family home at this point? It's because they don't feel that they can cover that increase in the mortgage.
Right.
Maybe they want to downsize, but overall, the amount of homes that are listed on the market is the highest number that we've ever seen in history. So that's a pretty
I
scary
I think
statistic.
part of it is, Colin, because people are worried whether they're going to be able to keep employment at the level they're making to pay that mortgage. And the
Correct.
reason they're worried is AI.
AI. Yeah.
Across the board, every industry you can think of, AI seems to be eroding some of the workforce, and
Sure.
people are nervous. I mean,
Yeah.
you know,
And rightfully so. We're seeing a number of jobs, jobs that were stable jobs that people have been living on for a long time. That being said, I mean, if your home is typically the largest asset that you own, it's also not a good sign that people are willing to dump them. But I do think the problem with investors is that investors are can get emotional and they will sell at a time, and people sell at the worst time and then they buy at the worst time, right? I mean,
yeah,
when the market's going up, they love to buy.
yeah,
But now that we've seen a little bit of a pullback, they're selling. I think anyone that can should do whatever they can to hold on to their home because I think that in
right.
5 years, they will be happy because with the tariffs that seem to be in place for the consistent future, the cost of lumber is going to go up significantly. The cost of copper is going to go up significantly. There's a lot of copper in every house.
Yep.
There's a lot of lumber in every house. Um, they say, and I don't know if the statistic's true, they say almost 25% of the labor force that builds homes is illegal. And
Yep.
so if we move the majority of those people out, if you add just those three things together, the cost to rebuild your home is going to skyrocket.
It's going to
So
shoot up. Yep.
it's going to shoot up. So I think you have to be patient. If you can, I would say be patient and do whatever you can. Negotiate with the bank. The bank doesn't want your home either. So I would say, try to hold on to that asset as best you can because the cost to rebuild your home in 5 years will be 35 or 40% more than it is today.
Wow. That is
And
a huge jump. And because then you're saying everyone that owns a home right now, the value of that home could go up at least 25%. At least
100%. Yeah,
you know,
100%.
30%, which is huge. If you own if you own a $400,000 home, it would probably be worth 500,000 in about 5 years. Is that what you're
100% it will be. And I guess that's maybe my next book, but yeah, so I think it will go up. And I think
You can get Colin's book. Silver is the new oil. It's on Amazon right now, and it's doing very well on Amazon.
it
I
is,
think
yeah. Yeah,
so.
it is doing well. It's my first book and excited to get it out. I dive into silver, a lot of the things that I'm talking about here. Obviously did research for years to learn about the silver market, been studying the silver market. And my short-term goal for silver over the next 6 to 12 months is $48 an ounce. That being said, I think once it hits 48, I think it will blast through and hit 50, which is the all-time high. But yeah, I mean, silver, since the book has come out, is up about $10 an ounce, which is a pretty significant gain. But let's talk about gold.
Okay.
Gold's been interesting. Texas has created a digital payment platform for gold. So in essence, you store your gold with Texas, and they give you a debit card, and you can buy things with. So it's basically sort of like a savings account / kind of a credit card that you have with gold. Revolutionary idea. What are your thoughts, Pastor Paul, on that? What do you think about having that option as a resident of Texas?
I think it's a great option, to be honest with you. I mean, you got to let the people, anytime you give people a choice, no matter what it is, options to make decisions, then it's always good. And it ends up eventually being good for everyone, not only the individual, but for the market itself.
Yeah.
Or the industry itself.
Yeah, I think it's a good idea. I mean, I think the only thing is I never love a state or a government holding anything of mine, right? That's the only thing that always makes me nervous.
Are you saying that they want to? They're not going to let people have their?
Well, in this format, the thing they're doing is you buy gold, they store it, they give you a debit card, and you can charge against it. Which is a cool idea. I think it's a better idea than a savings account.
Yeah.
My only concern is the fees could be high. Something that you really have to factor into it. People don't always look at monthly fees, but a monthly fee of a 0.25% it ends up being much higher than 4% in a year, and they just don't, they don't equate the math. So I would be careful with what the fees are. But the idea is similar to what we've done for clients, is that they buy gold, they put it in their safe, and then over time, if they need money, they sell it back to us.
And
right?
you buy it back.
Yeah, we buy it back. And luckily, knock on wood, our clients have been extremely profitable. And I would say it's really because at Noble Gold, we sell bullion, coins, and bars. And I've seen us compared to 100 of our competitors, and I can stack up and I can tell you that we've made them more money because we didn't sell them specific
Cheap
rare coins, right? These funky coins. I've seen reviews of people with some of my competitors where they bought gold 3 years ago, which they should be up tremendous, and they're not even at break even because they bought a specific, like a bison coin or one of these weird coins. So, you really got to be careful. But yeah, no, we buy back. And it's the advantage of us and Costco, and Costco doesn't buy back. We buy back the gold and silver and platinum, palladium. We actually recently had a client sell some platinum back, which I think it might still be early, but they were up 50% on their platinum purchase, and so
they wanted to cash out. They
wanted to take some profit off the table.
Maybe they'll turn around and buy silver. Okay.
Maybe, yeah. I mean, at the end of the day, it doesn't matter to me. Like, I'm happy just to see the profit, right? I'm happy to see a client, that turned, I think it was 50, 60,000 into, over 100,000.
Yeah,
so it's nice to see that happen. So I think that's the advantage of us versus some of the other guys out there, is that we sell a very small amount of coins and bars, the ones that everybody wants and that have the highest weight, highest purity. We sell them at a good price, and then you can get out when you see profit, if you see it. Some people are selling silver at profit. I think it's very early, but it's available to them because, as you know, life change. You might need the money for a trip or fix your roof or whatever it is in your life. So I think that's the kind of beauty behind it. Also, the other thing I would just be careful with this, with the state of Texas, I think it's a cool idea. with us, you store it. There's no fee, right? If you buy it directly, we ship it to you. So you do save a lot of money just holding. Gold and silver platinum. If you buy it and store it yourself, it's literally the least expensive investment in your whole portfolio in terms of what you're holding. There's nothing that is less expensive than holding. If you have a stock portfolio, you're paying management fees or mutual fund fees. If you have real estate, you're paying taxes. You're paying to fix the property.
Insurance.
Gold is dollar for dollar. Gold and silver is least expensive asset that you can hold in your portfolio.
Because
In
you
terms
can
of
actually put it in a safe, lock it down, and you don't have to pay taxes. You don't have to pay interest. You don't have to pay insurance. You don't
right,
unless
that's
you.
it. Yeah, and
Yeah.
even in IRAs, our fee to annual fee is $275 per year. That does include the insurance of your asset.
Okay.
It includes all the custodial fees, and that $275 fee is tax deductible.
Yeah.
So I would say dollar for dollar, our asset is an incredible asset over time. And there's all these studies about 401ks where people aren't aware of the hidden fees. It's 1% to 3% a year in a 401k. Any way you want to look at it. Sometimes they get it closer to 1%, but I would say average from what I've seen is closer to 2%. 2% a year over 30, 40, 50 years, it ends up being hundreds of thousands of dollars in loss.
Yeah.
So you avoid all that with us. So yeah, big picture, exciting times for us. Anyone who wants to get my book, silver's in here, some real estate opportunities, platinum's in here. And actually, you can just call us and we have codes. We can help you get the book at a discounted price. If you want to just buy it, it is on Amazon too. But at the end of the day, we have a lot of good information. We have a silver guide, we have a platinum guide, a lot of good information we can get you, and you can talk to a live person. I think that's the thing that separates us from a lot of people out there is you're going to talk to a real person when you call in, which I think
you don't know how frustrating it is to call anywhere and can't never get a real person. I mean, I'm frustrated with my cable company right now. It's unbelievable. You can never get through. At Noble Gold, folks, you make a phone call, somebody's going to be on the line with you, and they're going to listen. That's why I like your guys. They listen, then they give advice. They ask you where you're at in your life cycle, and they don't say pitch it all in. They don't say go all in. They always usually they say let's diversify a little bit.
Yeah, absolutely. Yeah, we and I say this and it's true. We turn away more business than we take. Because, sometimes someone will call us and maybe they only have $1,000 and that's all they have, and we're going to tell them no. We're going to say no. We turn away a lot of clients because you got to have enough to invest, right? Like you got to have enough put away so that you can allow the investment to
do
its course.
Let it work for you. Right.
Exactly. So we do turn away a lot of business. Ultimately, we want to build a relationship with you. And we just, if you want to learn about what we do, I think it's a great time. I think you will be happy. Our reviews are just skyrocketing. I think we're close to 1,000 reviews on Google and a few other places. But yeah, we really focus on the relationship, and we know it's going to be a long-term thing because whether it's in an IRA or whether you have it at home, you're going to want to call us and ask questions. So we're going to make sure that you get all your questions answered before you purchase. And then as you hold the gold and silver, if we hold it, whatever, you can always call us and get your questions answered. But I think it's an exciting time. I think quantitative easing is coming. I think whether they lower rates, however they try to do it, it will devalue the dollar. It will make the dollar less expensive. That will be good for gold. So all of the things, the measures, even this beautiful bill, they say 4.2 trillion in debt. Like all of these things devalue paper. Yep. Everything that's happening, the debt and everything devalues paper. It makes real assets more valuable. And that's why I said the thing earlier about single family homes, I think will go up. I think gold and silver will go up. I think the real assets will shine through this time that we're in.
How do you feel about the tariffs? I last month was the first time ever in this country, and I don't know how many years, that we actually had a surplus. Mm-hmm. And it's because of the tariff money coming in. Is that a positive for us, or is that going to, or is the inflation from it going to hurt us more than help us?
Well, I think the way they served up tariffs initially, I think they served it up in a way that it made it seem like we were trying to do something that no one has ever done. Every country has this tariff against us, and they've had it this way.
It's been wrong. They've been beating us up and taking from us
Correct.
forever. Right.
Correct. So I just look at tariffs as like leveling the playing field.
Yeah.
That's all. And I think we'll end up between 10 and 15% with most countries. And I think they're going to have 10 or 15% when we ship goods to them too.
That's fair.
I think he's a negotiator. He started with 50%, 40%, these large numbers. But I think we end up getting down to a number that makes more sense for everybody. And ultimately, this idea of us shipping all of our manufacturing overseas was a failed experiment.
Yep.
It made a lot of people very wealthy, and it made the middle class very poor.
Yep.
And there's no other way you can look at it. If you look at the statistics when we started doing this in the mid to late 80s, the middle class was the wealthiest after World War II to basically like the early 80s. That's when you could have a household where one person worked and the other person stayed home. You could buy a house,
buy a car.
You could buy a car. You didn't even have credit cards. They didn't even have credit cards until the 70s.
You didn't need them.
You didn't need them. So I think if you look at this experiment of shifting manufacturing overseas, it made a certain group of people very wealthy, and it made everyone else just more and more poor. Now, people felt wealthier because things felt less expensive. But if you really nailed it down into the cost of what you were paying for, it did make you less expensive. And it created this capitalistic, idea that you always had to buy new things and get new things because it was accessible. You had a credit card, or you had all these ways to buy things that you didn't need. And for people that, don't agree, I would say, look at what happened during COVID when everyone was locked down at home, is credit card debt went down for the first time in 30 years before. It was the only time because people were at home with their families and whoever, and they just said, I don't need all this crap, right? I can just stay at home. And they paid off their credit cards and they just bought less stuff. So that was the first time that happened. And then as soon as the world opened back up and they started giving all the free money again, the credit card debt skyrocketed. And, I think it was a year ago, we hit $1 trillion in consumer credit card debt. So I think the experiment has failed, and now we're just kind of pushing back. And there's going to be growing pains with this premise that we need to make things here and things are going to cost more here because we're making it here. But at the end, the surplus is beneficial to us. It will help us. It'll help our GDP. In the end, it will help us, but it's going to take many years. I just hope that after President Trump's in office, that they continue this forward, because I think it is a way to make the middle class stronger in this country again.
Well, I'm going to predict that even after Trump's presidency, let's say a Democrat administration was to come back in, that they'll see that that's working too good. They won't want to touch that. The money's coming in, it's working good. They'll just leave that one alone. They'll go to other areas to try to change,
absolutely,
social areas. As long as they leave the economic, this new tax cut that just came in is going to benefit America. Thank God it's a 10-year deal. I think they'll leave everything alone because the finances are turning in the right direction. It'll be real easy to be the next president of the United States. I'm going to tell you right now. Do nothing.
Just let it be. The only thing, and this doesn't help me at all, I do think, and people are going to hate on this, but I think corporate tax, you could go up. I think it would be fine. I don't think corporate tax being
at 21,
28, I think it's fine either way. I think listen, as an owner, I love it. But at the end of the day, like, if that would put more money in the pocket of,
I understand. Yeah.
That's the one thing. But there are some smaller things in there. There's some things that I think are, the overtime, the tax stuff, it's not enough. I think it's a little clickbaity. I wish there was more to that side of it. So I think there's some pros and cons to that bill, but ultimately I think putting more money in people's pockets is always a good thing. The 28 to 21%, I hope it encourages people to open more businesses.
That's
If it does, if that does that, then I think it is a benefit, because ultimately that'll create more jobs. At the end of the day, I think the asset economy is what we're in right now. To simplify it, silver's a good asset, platinum, gold. If you want to learn about it, call us. Real people. We're tried and true in the industry. We ship fast. We buy back fast. We do IRAs. If you don't like where your IRA is at or want to take a portion, we can do all that paperwork. Give us a call. Learn about what we do. In a lot of ways, it's a simple thing that we do, but we do it really well. And we've been around a long time, and proof's in the pudding of what we've done for clients over the last 4 or 5 years.
Folks, you heard it. Colin Pluman, he is the man. You can click on that link below the video, www.pastorpaulgold.com. Click on that. It'll take you straight there. Or pick up the phone. Call them at the number there. You see it going on the ticker, 877-646-5347. Tell them Pastor Paul sent you there. And get in control of your own destiny. That's what Colin offers more than anything, is the control to you and the ability to grow your own wealth and protect it while you're doing it. So, Colin, I appreciate it. I love working with you.
Me too.
Years, and God bless you, your family, and we'll be talking again soon.
Thank you, Pastor Paul.
Thank you. God bless. And folks, I hope you've enjoyed this segment. Again, I tell you, I love Colin Plume. I love his company. I love what they stand for, and it will be a blessing to you. Pick up the phone and call them and just tell them where you're at and let them help you. That tax advantage of shifting some of that 401k into a gold or silver IRA. And I didn't even get to show you this. I got to before we leave. Guys, if you guys qualify, and you probably will, Colin will give you this 5 ounces silver coin. He'll give you 2 of them. What? 2? 1 for each hand. And be sure you're blessed, okay? All right. God bless you guys. Are you serious?